looking forward to today's show. Lots of stuff is going on right now, that's for sure. I'll start off with kind of a summary for what's happening in the market here. And yeah, as we are speaking right now, the market has been coming down. Israel, had a strike against Iran, really kind of last night. As far as that go, the
Mhm.
market was down, I don't know, 0.7% ish, and then we had a retaliation strikes that have been reported now into Israel. The market was down about 1.2%. Is it still in that same neighborhood now, or is it
Okay.
gone?
1.1.
1.1. Okay, so I don't. It's interesting. These conflicts happen pretty predictable pattern actually for the most part, which is like for Ukraine. The market dropped pretty heavily
Hmm.
when Ukraine was first, invaded, and there was some real concern about oil in that one too, because Russia produced 11% of the world's oil and such, and oil did skyrocket up to $130 a barrel. Um, excuse me. Hello, I'm back. Swallowed something the wrong way. I think that's the first time that's happened. We've done a lot of shows.
Yeah.
It is live. Um, which is I think kind of fun sometimes, but something happens. But so in terms of these conflicts, oftentimes the market does recover. It'd have to be something that would affect the economy for the
Hmm.
market not to recover. And so far, we've seen oil prices go up 7%, which is not insignificant, but so far we haven't seen, oil being heavily involved yet
Hmm.
in that conflict, for example. And Iran, actually, most of their oil production goes to China, uh, upwards to 100%, actually. So, it's still important in the overall scheme of, the price of oil, but because inflation is one of the threats.
Hmm.
And so having oil go up would be an issue, but excuse me.
Yeah, but it looks like with the Israeli strikes, there was nothing targeted at oil per
Mhm.
se.
Right.
So, um, the bigger question is, will there be any kind of action into the straits? Um, because that's a big shipping area of a lot of oil and natural gas. If Iran does something, I think there'd be a lot more political or a lot more military.
Yeah, that's where you could really mess with the price of oil theoretically. I think a third of the world's oil and natural gas goes through the Strait of Hormuz, I think it's called.
Yeah, sure.
Um, and so, it's definitely some impact. The market's down because of what's happening today. But at least where it's standing at the moment, again, you got you look at this as a person, you might think one thing. You look at this as the market's going to look at it, which is what I'm trying to train everybody here. A little bit different sometimes.
Hmm.
These conflicts are deadly, and they're no fun to deal with at all, I'm sure. But the market's probably going to be okay with what's happening so far. Um, there are bigger issues that the market has to deal with,
Hmm.
right? So that are more long term, and so that's basically do something a little bit different here with Eason and I are going to kind of brainstorm. What's really good. What over the next 12 months, what could propel the market forward,
Hmm.
and over the next 12 months, what could make it go down,
Yeah.
right? Because look, we've had this nearly 20% drop. We've recovered almost all of it. Back above 6,000, down below again. I got to take another break. Hang on.
Okay.
All right, try it again. Sorry about that. Um, and so, one of the comments that came in this week from the weekly videos from Adam actually is asking about, are we still out of the market in some, because as I mentioned before, we were at 63%. After Liberation Day, we dropped down to 23%. We back up to 46% now. Exposure to stock market on our across the board on our average client. So we're still about 25% less stock than we normally have. And the reason is because the way I look at things, and just in a sense of you're going to take a certain amount of risk Your risk-free rate right now is pretty high at a little over 4%,
Yeah.
right,
Yeah.
for T-bills. And so, your market rate of return, at least in the S&P 500 average, is about 11%. And so, you have to look at this teeter-totter. This is the ongoing conversations I have in my head all the time. Is the positive aspects that could influence the market to the upside, are they high enough to stay 100% invested or even 110% invested or
Mhm.
whatever it might be?
Yeah.
And so, and let's talk about what the positives are. I mean, the market right now expects a rate cut, right? I think it's at 75% in September, rate cut. And so rate cuts are good for the stock market. Some of that's already priced in.
Hmm.
Uh, and so, but that's a positive. You've got a situation where, this tax bill likely will be considered a positive by the stock market if it
Yeah.
does pass,
Yeah.
right?
Because people will have tax cuts, and then corporations will also possibly get tax cuts.
Theory is that it's just more money that can go into the economy that's not going into the government's coffers, so to speak. We are at this period of point in time where we have a lot of debt, 36 trillion. And so adding to that debt is going to be harder and harder as we go forward. But
Hmm.
I still think over the next 12 months, a tax cut bill, somewhat similar to what we have, probably will be different by the time Senate gets done with it, will actually be seen as a positive, right? Of course, artificial intelligence is huge,
Hmm.
right? And to me, it's the .com, of our, time frame here. And 95 to 2000 was the best 5 years in the history of the stock market. And, I remember very specifically, we didn't know what the internet was going to be able to do. We had no ideas for, that it would turn out the way it has turned out. But there was a lot of enthusiasm about the possible power from that. And, the stock market went nuts. And really, we had a, you know, incredible PE ratio got to 45 on the
Hmm.
S&P 500. Of course, it got ahead of itself. Market fell 48%, before everything was over. But we're not even close to the animal spirits portion of the artificial intelligence wave, in my opinion. So I think it's a very powerful force and maybe one of the most powerful. Ultimately, it could lead to another big drop like we had in 2000 if it gets too carried away, but
Yeah.
but we're not there. So I think that's probably one of the biggest powerful pieces. Um, we have this the the tariffs. There are some positives potential, right? Number one, the courts have said that current tariffs are illegal. Uh, uh, you know the um, they appealed that, got a temporary stay. Probably goes to the Supreme Court.
Yeah.
Supreme Court could say these tariffs are illegal, and I think it's one of the things that's really weighing on the market. So if you took off the tariffs, if the courts did that, um, the markets would move pretty heavily, I think, to the upside. However, it might be mitigated somewhat so by the other ways that they can do tariffs.
Hmm.
And so that still might come in. And then there's this concept that Trump always chickens out, right? And honestly, if I didn't think Trump was going to chicken out on these tariffs if he needed to, I probably wouldn't be in the stock market at all.
Hmm.
So I think that's an actual a benefit. He put up those Liberation Day tariffs, which were way too high. Market just crumbled. Bond market started falling apart. Um, but he backed off, right?
Yeah.
And so he's shown that capability to back off. I do think one of the things, though, that bothers me, and I'll save that for the negative side, is the fact that he now knows about this taco concept,
Hmm.
which might make it less likely that he actually backs off. Because I got to feel like right now that's what the market's looking at. These tariffs, even if they're bad, it doesn't really matter because they'll adjust the tariffs when needed. And if that's true, then that's probably the biggest piece on the negative side is
Yeah.
those tariffs. So um, Congress could step up also if they needed to. If for some reason the president and or his group doesn't back off on tariffs and is starting to cause all kinds of problems, Congress does have the authority to take back tariffs.
Yeah. And they can place their own tariffs or
Mhm.
supersede them, basically.
Exactly right. And so uh, I do feel like that's a possibility, but it's a very light possibility in the current environment. It would probably take some significant pain, so it really doesn't help. I think I don't count it as much on the positive side.
Hmm.
Market might need to be down 40 or 50% before they finally take action.
Yeah.
So that doesn't help us much as far as that goes. I will say, I'm a big believer that the market moves in a particular direction because it knows a lot of things that maybe I don't know. And so, a positive moving stock market generally means good things, right, are coming. Now, not always. And really, it's not so much just the current trend that we're on right now. It's more the primary trend that we're on right
Hmm.
now, right? And so, at least on my book, the primary trend is still negative. We haven't broken into a new high, and some of these other things that need to happen
Hmm.
to say the primary trend is up. Because again, you can get a lot of false moves. 2022, we had three big moves to the upside, even though the market ended up breaking all those moves down. And here we are trying to break through. I think we break through here, but I don't know. I mean, if we don't, I think it's quite dangerous.
Yeah,
You
because
know,
that would be a double topping, which is a
yeah.
very scary chart to see.
So I'd still probably put that more on the positive side right now because we're really close. We backed off some today now because of this,
Hmm.
Israel-Iran situation. But I still think, there's some momentum there to kind of get through to a new all-time high. I guess the next question will be, is it real? Because we've had a couple of breakthroughs to all-time highs this year. They weren't very high, and then they fell back down pretty quickly.
Yeah, they kind of fizzled out.
Yeah, so that could happen again here. So I like to see some sustained, motion above the all-time high as far as that goes. So those are anything else you can think of on the
Um,
positive side.
the labor market and inflation. Inflation's kind of
Yeah,
tamed itself in a sense. It's not really going up or down. It's kind of
yeah,
just maintaining,
yeah,
which is kind of fine for most people.
right,
And then the job market's still strong,
right.
and that's quite positive.
Yeah, I don't put those much weight on those currently, only because um,
They're going to be lagging a
well,
little
they
bit.
are lagging indicators, obviously, especially the labor market, because it takes a while for companies to, um, lay people off if they need to or what have you. But more importantly, we have these impacts that are coming that aren't here yet.
Hmm.
And so it kind of skews the data for me. And when I look at, oh, yeah, there's 134,000 jobs created. Part of that's because of the tariffs in a way, in this weird, perverse way where people are actually pre-buying things,
Hmm.
cars and iPhones and what have you. And we actually have a good economy heading into the impact of tariffs, which we haven't been able to see yet. And of course, we don't even know what those tariffs are going to be. We don't know what the impact's going to be. We don't know how long they're going to last. We don't know if they'll adjust them up or down, right? So that's a hard one. Um, so, okay, on the negative side, I started off with the Federal Reserve, might lower rates, but if they don't lower rates, uh, that's a negative for the stock market because there's already some baked in expectation based on what the market is
And
seeing.
it's been pushed back multiple times this
Yeah,
year. The expectation has been pushed back.
that's right. I remember it was quite high for a rate cut in June, remember, at the
Mhm.
beginning of the year. And here we are in June, and that's nowhere on the table whatsoever. And now we're talking about September. And again, potentially by the time we get to September, we might see some of the impacts of tariffs. And if those impacts happen to be inflationary, then, we might not see a rate cut then either, as far as that goes. So, that's going to be a negative to the market if we don't actually have the rate cuts. Obviously, if we have a rate increase, we've got all kinds of issues going on. But just the thing. The tariffs are the number one thing, and they're the thing that kind of weigh this for me, so that extra 25% of stock market exposure is not in the market. Historically, tariffs have been awful for stock markets. Have been awful for, especially at this level, right? Little tariffs, not so big, but big tariffs like this have been historically really bad. But it's still very, very difficult to tell what this means because the last time we had big tariffs like this was 1930. We were a goods economy much more so than we are now,
Yeah,
right?
it's hard to gauge any kind of data from that period.
Oh yeah,
It's
it's like the pandemic, right? When the pandemic hit here in 2020, you want to go back and see, okay, what happened before? How did this work? Useless information, really, right? I
mhm,
mean, in the end, because it was so long ago, and things, the government pumped out $10 trillion between quantitative easing and all the stimulus things, and we had one of the best stock markets I can remember.
mhm.
In that period as we recovered. So. Um, I guess I will put that on the positive side. I forgot that piece. That does have to do with Congress. It is quite possible in today's world, every time we've had some type of significant issues, Congress has come up with some way to push money out the door
Mm,
to kind of, we did it in 2020, we did it in 2008. So if tariffs cause problems or something breaks, there's no doubt in my mind that Congress would look at the possibility of going out and doing some type of stimulus type of things. I will say it's going to get harder and harder and harder to do that because it's debt. We're
mhm.
taking on more debt. Bond market's already had a couple little freakouts here, sending some warnings across. I think the bond market's happy right at the moment, but you go try to put out another $10 trillion for the next big problem. I think you'd have all kinds of issues
Yeah,
with
the
that.
bond market already signaled
Mhm.
that, it doesn't want to take on any massive
Right.
deficits right
So maybe that's there though. It's still on the positive. And so, if you look at deportations, I put on the negative side because you're taking taxpayers who are working in jobs in some cases out of the system. And so, and they're doing jobs that in some cases that other people don't want to do.
now. Hmm.
And they're often doing them probably for cheaper than what you would do for the replacement people that would come in. And so, we'll see. It takes a pretty big number of deportations to make that work, and we'll see how that plays out. But to me, historically, it has been a negative on the economy, at least in the short term.
Yeah, and it doesn't have to be deportation of actual people. It could be the fear of deportation
Yeah, yeah,
because any business that has employees that aren't showing up to work,
yeah.
you can't have a business run that way.
Yeah, exactly. Uh, so I put taco on the negative side and the positive side. So taco's Trump always chickens out, right? So on the positive side, it's true. I think there's
Mhm.
22 different times where he chickened out just in this particular run
Mhm.
of negotiations. It's probably a bad way to say it. Really, it's more like he pivoted or whatever you want to call it.
Yeah.
But now that he knows about Taco and he's all mad about it, he doubled the tariffs on steel and aluminum, started squabbling with China, as far as that goes. So, you know, uh, again, the fact that he pivoted or chickened out was a benefit. If you take that away, I think that's a huge risk to the stock market. If he really sticks with his things, even though things are starting to fall apart pretty heavily, that's a big problem. So it's kind of weird. Uncertainty probably needs to be at the top of this list. I'm hearing this from all over the place. I'm hearing this from different people, within the clientele. You're reading articles about the uncertainty creating situations for CEOs. And so, if everybody starts to think, oh, this is bad, you kind of end up with bad. I mean, just
Yeah.
it's a self-fulfilling prophecy. So that's definitely happened.
Especially how the U.S. market is based on the consumer. If the
Mhm.
consumer is uncertain and stops spending,
Yep.
you're gonna have trouble.
Yeah, that's right. And so, of course, the tariffs have pissed people off around the world
Mm.
and scared people too. So tourism has dropped dramatically. I keep reading about $12 billion less revenue coming in from tourism.
Yeah, and this hurts a lot of like just certain states or locations, where tourism is a big part of their economy.
Yeah.
Another thing is just retaliation against U.S. goods.
Hmm.
Even if we're exporting it, are they actually being sold or just staying on the shelves?
That's right. Yeah. Yeah, exactly. You're hearing about these situations where people are canceling contracts because it's an American company. Not even though it's not a tariffed, product, it's just, we don't want to buy American products. McDonald's has talked about it some in different places that we're seeing that. So, yeah, I put that on the you cut back on government spending, and that sounds like a great thing. And it probably is over the longer term, but in the shorter term, what you're doing is taking that money out of the economy,
Hmm.
right? So you're taking tourism out of the economy. You're taking, deportations. You're taking that tax revenue out of the economy, and that spending ability out of the economy. You're doing government layoffs and cutting back on government spending, not doing all of these different grants and different programs. That's all taking money out of the economy, and it does help, potentially lower the deficit in total. Of course, you keep the tax cuts going, it might not, but
Hmm.
it would still be lower. But in the short term, that is a economic, negative, right? And I'm looking at the next 12 months. So um, I guess the other thing I'll put out there, kind of the geopolitical tensions and something failing. So one of those two things happening. So when you start to put things under pressure, you have a higher probability of something failing, like Lehman Brothers failed in 2008. And that's one of the reasons why I would want to have 25% in T-bills of my stock market allocation in T-bills at this point in time, because when something breaks, it'll happen. The market will go down so fast, you'll definitely have a hard time getting out. Whereas if you're already out, yeah, maybe you lost out on some, gains that you might have made if things go up. But that's something I worry about. I look at China. China, we had, I think in May, 35% less exports to the US, and their overall exports are still high because they're now starting to go to the rest of the world is coming to them. And and they're able to now really flex their muscle on this rare earth metals.
Hmm.
We're basically begging for magnets. Wait until they flex their muscle on their 98%, antibiotic, distribution or production. Um, I think they have experience here where the possibility of invading Taiwan starts to go up. I don't know that it'll happen. I hope it never happens. But you just made it more likely with this particular tariff situation because now China has started to see, hey, this isn't so bad, dealing with this situation.
Hmm.
They have 800 billion of our bonds. I mean, they have set themselves up over the last 40 or 50 years to take over some very critical areas and purchase a whole lot of our bonds. They are ready for warfare, more
Hmm.
so than we are. And so that's become a higher issue, right? So I don't think that'll happen, but honestly, usually when something fails, it's not even something we're talking about.
Hmm.
That's what makes it so dramatic. Who could have guessed? I think Lehman was a 108-year-old company at the time. Who would have guessed that they would fold up, right? Bear Stearns would have folded up right before him, but they bailed them out, another really old company. So um, that the risk becomes a little higher. So anyway, those are the pieces that we've been looking at as far as that goes, and really just trying to kind of look at that teeter totter and say, okay, here's all these positives. And again, if I was to just name two, I'd say AI versus tariffs. you
Hmm.
know, and you throw in all the other pieces that come with those, but can AI be good enough to outdo the issues that tariffs could do? The answer is still it's why we're 75% in
Hmm.
because the AI is in my opinion is real. It's just starting. We're really just beginning to see the impacts of that, and we're certainly in that overall scheme of a run like we saw in the .com. I'd be surprised if we're even halfway through.
Hmm.
Tariffs could disappear, right? Or it could be adjusted. And so, that's why you make a little bit more bet to the positive side here, as far as that goes, and then just wait and see what's going to happen and see what really does happen with these tariffs, and it'll give you more confidence one way or another. So anyway, that's that's where it's at. I think it's a really interesting time frame to be an investor. It's a very, very difficult time frame to be managing money, as I've mentioned before, just because of the uncertainty around the tariff situation,
Hmm.
right? It makes it almost impossible to determine what might happen. This is not a normal economic event. There's nowhere to go back and look at anything in the past because it's too old. And so you just kind of have, that's why keep a little bit of powder dry and kind of wait for things to play out here and see how it goes. So anyway, that's our summary for the week here. I'm glad everybody was able to join us. We won't actually have a summary next week, just as a notification. I'm going out of town Thursday, Friday, and Monday. So keep doing the videos and Monday through Wednesday, but then nothing until the next Tuesday. And no show and no summary. Uh,